What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I think YouTube fixed everything. I mean, they were freaking out, like making comments on Twitter. People were freaking out on there. And they're like, oh yeah, we're looking into it. We're looking into it. And all I had to do is Twitter search, and people were freaking out. People couldn't edit videos or anything. And I'm pretty sure it's fixed now. So make sure you hit that notification bell. I'm going to be pumping out videos like crazy. So you guys have to be keeping an eye on this channel. Just search the word Dividend. But if you hit that notification bell, you're not going to miss future videos. So I'm going to tell you that, um, for future reference, because I'm going to be pumping these out. I'm going to be enjoying posting videos for you guys. And I'm going to do reviews on some dividend stocks. A lot of you guys are mentioning certain stocks. I keep on forgetting to do that. I have some things written down here, and I still have to go back in there. Just keep on reminding me, and I'll write them down. But these are really high yield dividend stocks that I own. Some of them are I own. Some of them you guys probably own, and some of these you may never even heard of. You guys got to check this out. Let's check these guys out right now. Now, the first stock is Omega Healthcare Investors. I have posted videos on this, but since these guys are a dividend achiever, and to be a dividend achiever, you have to have 10 consecutive years of dividend increases. I'm going to go from basically right now, currently one, two, three, four, five. So I'm going to go in order as of right now, as of today. You have a 9.62 dividend yield, a PE ratio of 15.18, a volume of 3.80 million US dollars. Year range is 27.26 to 39.31. Day range is 27.71 to 28.38. Who are these guys? So remember, I always say with real estate investment trusts, study them. Look at the website before you make some conclusions and decisions. Let's check these guys out. So look at this. The future of senior care is local. Designing for communities' individual needs is key to the long-term value. We have unrivaled knowledge of individual needs and long-term elder care trends in every region in the US and UK, and our scale enables us to focus the majority of our capital toward continual improvements in our portfolio for the mutual benefit of our operators and our investors. Our reinvestment programs include property market analysis for a full 360-degree perspective of stakeholder needs for each facility. So they have 63 operators, 944 facilities, 42 states, and one foreign country. So look at this. I'll just give you an example. So right here, I'm in Ohio. I'll just click this. There's operators and facilities. And I'll go over these guys real quick with some of these facilities because you need to know what the heck you're getting yourself into. And again, this is not financial advice. It's for entertainment purposes only. Disclaimer in the description. These guys have a lot of facilities. Check this out. So I'm seeing skilled nursing facilities. Look at this. Pennsylvania, they have a lot. And again, people need skilled rehab. There's high recommendations for skilled rehab by physical and occupational therapy. As a nurse, I can't even tell you how many patients on the floor need skilled nursing facility. They say no, and guess what? They're back in the hospital, and then they agree to skilled nursing facilities and assisted living facilities. There's a lot of them. And I'm telling you, people are getting older, people are getting sicker, and there's a need for assisted living. And look at this, acute care hospital. Acute cares are in demand. Here's an independent living facility. Look at all these skilled nursing facilities. What's the thing about this? There's a high amount of amputations. In the winter, there's a high amount of fractures because people slip. Hip fractures, that's a big one. They get sent to skilled rehab. There's a lot of, I said amputations. Unfortunately, there's a rise in strokes. There's a rise in heart attacks. The sedentary lifestyle, it's like the norm. People just don't want to take care of themselves. People smoke. And it's catching up to a lot of these people that are retiring. So there's such a demand for skilled nursing. And you can say blah, blah, blah. Look at the obesity rate. And if you don't think there's a correlation with hip injuries and joint injuries and people not moving around because of living a sedentary lifestyle, you're crazy. Look at the statistics out there. Let me show you how much revenue they're making. And I want to see if their revenue's coming up. If they have an increase in revenue, I like it. Because guess what? 90% of what they make come back to us as investors. I'm trying to look at them to make sure they're not a yield trap or anything. And people are saying this and that, but I like the revenue increases. This is kind of a risky stock. It's cheap, but I like the increases in revenue, which increase my confidence. And these guys are big on skilled nursing facilities, and people need skilled nursing facilities. So I see these guys in demand as a stock. And what's really attractive is their dividend history, and this is why they're number one on the dividend achievers. Look at this: 2016, 58, 57, 58, 60, 65, 66, 67 cents. They have increased their dividend 9.57%, dividend yield, a PE ratio of 14.67%, annual dividend 268, and they are cheap. Hopefully they're sustainable. Don't quote me on that with their dividend, but they are cheap and I am buying right now. Let's jump to the next dividend stock. And this stock is taking a beating, but they have a reputation of increasing their dividend, and they will do what they can to increase their dividend, keep their reputation on board, and that is AT&T. They're sitting at $22.29, a dividend yield of 9.33%, PE ratio of 188.04, market cap 1.60, 160.24 billion US dollars. Its year range was 22.22 to 33.88. Day range was 22.25 to 22.73. This is a very cheap dividend stock. Now, there could be in the future a dividend cut. I'm not too worried. I always like to diversify in the communication sector. Big deal if they cut their dividend. I'm not too worried. They're cheap. They're a reputable company. They're always in demand. People need phones, people need cable, and I'm going to show you their revenue and their dividend history. And slowly as a company, they have increased their revenue. You can play the pandemic card. These guys would sell their souls to keep their reputation, to increase their dividend. I mean, these guys, they have such people invest in AT&T for their dividend, and they will do whatever it takes to keep their dividend hikes and their dividend increases and their dividend going for investors. Because I can tell you, you don't want to rely on investing in emotions, but if the moment they cut their dividend, people are going to be selling these guys and panic selling, and there's probably going to be a dip, and there's an anticipation they're going to decrease their dividend. But right now, they are hot. They're a great dividend achiever, and I have my M1 Finance dividend portfolio. I'm going to leave it alone, let it fly, and I'm going to show you its dividend history. So 2013, it was 45 cents, then it was 47, then it was 48, then it was 49, then it was 50, then it hit 52 cents. Will they increase their dividend? I don't know. PE ratio is 185.75, dividend yield is 9.11%, annual dividend is $2.08. Pretty attractive if you ask me. 22.29. Hey, what's wrong with that? So many people love it. I'm gonna buy it. I'll see what happens. This isn't not too excited. I'm not too confident with these guys increasing their dividend over time once this little thing happens in the future with the changes that they're making, but we'll see. Let's jump to the next dividend stock. That next stock has a symbol of MMP, Magellan Midstream Partners. It's sitting at 44.59. Dividend yield of 9.31%, PE ratio 10.74, market cap of 9.52 billion. Its year range was 39.93 to 53.85. Day range was 44.49 to 45.24. So who the heck are these guys? The Magellan Midstream Partners is a publicly traded partnership that primarily transports, stores, and distributes refined petroleum products and crude oil based in Tulsa, Oklahoma, formerly a part of Williams Companies. Magellan began trading as Williams Company Energy Partners in February 2001. 2003, they changed their name to Magellan Midstream Partners, and they're trading stock under symbol MMP. So they have 9,800 mile refined products pipeline system with 54 connected terminals, as well as 25 independent terminals not connected to our pipeline system and 2 marine storage terminals. In addition, we have approximately 2,200 miles of crude oil pipeline storage facilities with an aggregate storage capacity of 37 million barrels, of which 27 million are used for contract storage. Approximately 1,000 miles of these pipelines, the condensate splitter, and 30 million barrels in the storage capacity are wholly owned, and the remainder is owned through joint ventures. Look at this. They're partners, production, you got storage, isolated terminal, export terminal. So here's all their partners. All these like basically construction, looks like a lawnmower. So okay, so they really like to discuss how they're doing as a company. There's cars, school buses, and everything. How much revenue are they generating? So this is in millions of US dollars. So this is 2003 2001 2002 2005 2008 26, 2007 27, 2004 27. They're pretty stagnant. Okay, they're not jumping up, not jumping down. They have a reputation of being a dividend achiever. So this is one thing they need to keep their reputation on the line. So some people have fallen off in the past. Some people potentially may fall off. Let's check out their dividend history. Look at these crazy dividend hikes. 53 cents, 89, 90, 92, 95, 1.03, $1.03. Dividend yield is 9.12% with a PE ratio of 10.74, an annual dividend of 4.15. Is it sustainable? I don't know. I mean, it's hard to tell. That is a high dividend yield. Revenue is pretty stagnant. I mean, that's one that's pretty risky if you ask me. I don't have them, but hey, if I like what I see, I'm going to start throwing them on my M1 Finance dividend portfolio. Man, those dividend increases are significant, and these guys are rolling as a company with their dividend distribution, which I really like. And it's just one to keep an eye on. MMP is a symbol. That's a high yield. That's a very high yield. PE ratio 10.74. So, proceed with caution. There's a dividend increases. They have a reputation as a dividend achiever. So, if they want to keep their rep, they got to increase their dividends. So just keep an eye out for that one. Let's jump to the next dividend stock. So I've looked at this one for a while. It's Holly Energy Partners. The symbol is HEP. Has a dividend yield of 8.66%. PE ratio is 7.73. Z range was 1332 to 2369. Day range was 1608 to 1633. Volume 198.51K. Market cap 1.70 billion US dollars. Who the heck are these guys? Guys formed in Delaware, and they're a partnership in early 2004 by Holly Frontier and headquartered in Dallas, Texas. They provide petroleum product and crude oil transportation and storage throughout the petroleum industry. So here's a big thing. The partnership, through its subsidiaries and joint ventures, owns and operates petroleum product and crude oil gathering pipelines, tankage, and terminals in Texas, New Mexico, Washington, Idaho, Oklahoma, Utah, Nevada, Wyoming, and Kansas, as a refinery processing units in Kansas and Utah. Now, here's something to take into consideration. Again, the symbol is HEP. Look at its revenue over time. There's an increase in revenue: 332, 358, 402, 454, 506, 532. Pandemic hit 497 to 848. So they are generating revenue. Keep a very close eye. Gross profit is not bad. Few things, we have to keep on looking at. This is one thing, keep an eye on. Total non-operating income slash expense. Just be careful. Estimated earnings per share. Okay, look at the dividend. Okay, that's not bad. What about their dividend history? So I want to show you guys something that is a wake-up call. These guys had to decrease their dividend over time. So they were at 56, 59, 60, 63, 67 cents, and then they hit 35 cents. They have an 8.5% dividend yield, and the PE ratio is 7.74. But they did decrease their dividend. So I wanted to address that with you guys, that, these guys have a high dividend yield, but are they a dividend achiever anymore? No. So I wanted to address that one. That's my bonus stock. Let's jump to the next dividend stock. And here's a pretty popular dividend stock. Enterprise Product Partners, it's sitting at 2079, has a dividend yield of 8.66%, volume of 7.24 million. Year range is 1928 to 2569. Day range is 2076 to 2106. Now, these guys are really popular. I'm going to just go over them briefly. Enterprise Products Partners is one of the largest publicly traded partnerships and leading North American provider of midstream energy services to producers and consumers of natural gas, liquids, crude oil, refined products, and petrochemicals. So that's something that's interesting. How about their revenue? And these guys were up and down. 2014, 47,000, 2015, 27, 23, 29, 36, 32, 27. So they're a little up and down. So I just want to let you guys know the revenue's up and down. So, sometimes you got to be extra careful when you make decisions buying dividend stocks. But I'll show you their dividend history. 2015, 38 cents, 39 cents, 40, 41, 42, 43, 44, hitting at 45 cents. Dividend yield at 8.41%, the PE ratio of 11.68, annual dividend $1.80. So keep an eye on those guys. They're sitting at $20.85. We'll jump to the final dividend stock. Final dividend stock is Altria. So I went over the top 5. Altria was listed at number 6, but these guys should be number 5 because somebody decreased their dividend if you have watched the whole video. So it's sitting at $45.40 with a dividend yield of 7.93%. I have done numerous videos on these guys. People are going to smoke. They don't care. Revenue's strong. These guys have a reputation of increasing their dividend. And I'm going to show you their dividend history real quick. 52 cents, 56, 61, 66, 70, 80. Hit 90 cents with a 7.98% dividend yield, a PE ratio of 30.68, annual dividend 360. Altria is $45.37. Of these dividend achievers, what do you think is the best one? Let me know. Do you own these stocks? Are they on your radar after this video? And again, this is not financial advice for entertainment purposes, only disclaimer in the description. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you smash that like button. I will post a video tomorrow. We're going to keep on going with these videos. So got to hit that notification bell so you don't miss some of my videos. And these are free for you guys. So I don't believe in charging people. So you guys take care and have a good one.